Hi there, Phil, head of research with Moralis here, and today we're going to be doing some deep altcoin analysis. So if you look on YouTube, there's all sorts of chart analysis videos out there, but very few of them take a look at different parameters simultaneously and try to draw a conclusion about on-chain behavior. The good news is, using Moralis Money, you can go further and deeper than ever before. Let's take a look how. As an example today, we're going to use Refund Token in order to take a look at some of the unique features of Moralis Money. So when you're using Moralis Money, you are not only able to see the current state of the coin, but also historic metrics across a few different parameters. Here's why these are important for us. Let's first set our chart to 1 hour candles. This will give us a good view of the past few days, starting from the 22nd and leading up until today. What's interesting is that while we would expect liquidity to increase as buyers increase, the reality is this is not always the case. Focusing on 12 hours ago, the price is more or less at the same position that it was at. However, if we scroll up and then we select the 12-hour parameter for liquidity, we see that liquidity actually went down. Now, this would make sense if there were a lot of sell orders. Let's take a look at what's happening on the 12-hour time frame in terms of buyers. We actually have an increase in buyers. And how about sellers? Less sellers than buyers, yet liquidity is decreasing. Curious. Finally, how do holders look? Well, that's also up. So what does this tell us? This tells us that somebody with liquidity within the pool is removing that liquidity. Because even though the buyers are increasing and the number of holders are increasing, the total liquidity within the protocol is not increasing. This is only possible if somebody who owns liquidity is removing it from the protocol. And so it's definitely something to watch out for. Now, when liquidity is removed from the protocol, all that does is tighten up the supply and increase volatility in either direction. We can see this playing out in real time. As the price started to go up, the removal of liquidity caused the price to go up even further. However, it was short-lived and followed by an equally quick decline, rebound, and then decline again, leading us back to the same point. In contrast, let's take a look at an asset that had a price spike earlier today and a high volume asset, so it's less likely to see strong swings in liquidity. Here, the time we'll be focusing on is around 7:45 a.m. Copying the contract address and then returning to Moralis Money, we can take a look at 4 hours ago, very close to the time period that we were looking at. And if we set the other metrics to there as well, we see what's expected. The number of experienced buyers increasing, the number of experienced sellers less than that, and the number of holders going up overall. We also see an increase in liquidity. This is expected because there was an increase in price. When we take a look at the chart, we can see that playing out in real time, just like the other chart that we looked at. So that concludes our quick tutorial on determining more information based on liquidity changes compared with price increases or decreases. Obviously, there's a few different ways you can apply this knowledge, and depending on the coin you're looking at, may depend on what time frame and parameters you choose to focus on. In the end, Moralis Money is just a tool to make you better and make you more money in this crypto market today. So good luck, have fun, and see you in the next video.